Good evening. I'm Michael Toporek, Chief Executive Officer of Mechanical Technologies, Inc. Thank you for joining me to hear about MTI signing an agreement to acquire Soluna Computing. This is an exciting, transformative transaction for us. Before I talk to you about it, I'd like to recommend you read the legal information on the next two slides. It'll be helpful to provide you the context in which we're giving this presentation. This is the first sheet. This is the second sheet. As I mentioned earlier, Mechanical Technologies has entered into a definitive agreement to acquire Soluna. It's a transformative transaction for us, and this presentation will give you a little bit of information about it. Normally, I lead with the transaction terms and then tell you the way we see the world and our investment rationale. But I've been told that most people want to hear why you're doing something first and then get the details on what you did. So with that said, I'll begin today with our thinking behind this acquisition and then review a summary of the transaction terms. After that, I'll address some issues in detail that may be helpful as you think about this transaction in a format that's like an FAQ format. Let's first begin by talking about energy. It's the core operating cost of any crypto data center. I've got some numbers up here on the slide, but all I can say is it's big and it's growing. But this growth comes with a challenge. The greener the world becomes, the more the grids and flexibility becomes a constraint. Much of the green power that we get is intermittent. We generate power when the wind blows, sun shines, or the water runs. Global grids, for the most part, were not built to handle intermittency. The result? A lot of wasted energy. It's called a few things like spilled energy or curtailed energy. Whatever you call it, it's wasted energy. And as a problem, it's growing as more renewables come online to a grid that wasn't built to be nimble. This much waste puts a significant financial burden on renewable energy plant owners. They're under pressure to figure out how to monetize all the energy that they could generate. To get producers to monetize every megawatt they could generate, a few solutions are offered. Storage. It's expensive and only occasionally economically viable, but the technology may improve. Transmission, it's a simple idea, but it's complicated in its execution and is decades in the potential making, the idea that you just send the power somewhere else across the country. So in a word, computing is the solution. It's ready now. So through the 300 megawatt pipeline under LOI that Soluna has built, we will be able to offer energy providers with computing as a solution by implementing the Soluna recipe book. The solution is simple. Soluna tells power generators to be always on and generate maximum megawatts. Whatever can't be sold to the grid or sold at a poor price to the grid is bought by Soluna. Sounds simple. But given the regulatory frameworks out there and the variety of economic models that need to be worked around, a simple concept becomes highly complex project development. There are two trends that the Soluna deal lets us capitalize on. The significant growth in renewable energy colliding with the growing demand for computing power. Computing power will account for 20% of global energy consumption by 2030. Acquiring Soluna lets us provide a solution to the power industry's spilled energy problem globally, which could give us an opportunity to scale from managing megawatts to managing gigawatts across the world. The 300 megawatt Soluna Pipeline under LOI of computing centers is built to absorb excess renewable energy that would otherwise be wasted. The key reasons we're acquiring Soluna is to gain access to their team and their 300 megawatt pipeline under LOI powered by renewable energy. What makes that pipeline so special is the recipe book under which it's constructed. It solves power producers' curtailed energy problems. That approach is globally scalable and gives us a business model that can take us from managing megawatts to managing gigawatts. Conceptually, many of you will know that we like to match up consideration paid to the timing of value delivered as closely as possible. That's why you'll see that in this transaction, 92% of the consideration is actually contingent. We're paying $725,000 of cash at close up front, reimbursing $75,000 of transaction fees and expenses, and issuing 150,000 shares at close. After that, up to 2.97 million shares could be issued if certain milestones are met. So when are these contingent shares issued? They're issued only as the team energizes projects and we get value from their pipeline and recipe book to working with power producers. That works out to about 19,800 shares per active megawatt up to 150 megawatts. But there is an opportunity to accelerate some of that if the build-out happens quickly, which does align with our desire to scale up rapidly. The team is incentivized to develop the best opportunities, regardless of origin. As many of you know, our interests are very aligned with yours as common equity holders. We're sensitive to dilution. So to reemphasize, shares are only issued when sites are energized. That means that contingent shares are not issued, escrowed, or outstanding at close. That means no earnings dilution until the value of the asset is clear and ready to generate earnings. So for EPS calculations, that means the denominator is not changing until the numerator is about to increase. Let's put this in context with the rest of the industry. So based on capacity projected to be in service by the end of 2021, we're in the mix of the larger peer group. We looked at doing the same chart for projected 2022, but just found it's really too speculative given company announcements and what actually gets built. So what I can say is that we're targeting another 50 megawatts energized by the middle of next year, and a total of 200 to 250 megawatts combined, Soluna MTI, in service by the end of 2022. We also expect a significantly scaled up pipeline by the end of 2022. It's hard to tell where that would put us in size relative to our peer group by the end of next year, simply because we don't have sufficient insight into what the rest of the peer group will actually construct through 2022. What I am sure of is that we will be a relevant large cap player, and we will produce top tier returns on invested capital by being responsible stewards of our investors' capital. The Soluna team that put together the recipe book that's going to allow us to scale up rapidly has outstanding managerial, technical, and financial skills. You just take a look at their backgrounds, that becomes apparent. Post-transaction, our current holdco will change its name from Mechanical Technologies, Inc. to Soluna Holdings. I'll continue to serve as CEO of that entity. EcoChain's activities will be combined with those of Soluna, and John Belizaire will be CEO of that business, which will be renamed Soluna Computing. Moshe Binyamin will continue to run the instruments business. I wanted to expose some information about the pipeline. I normally like to be transparent, but for competitive reasons, I'm going to be very careful here. As you can see, these projects under LOI are based in the US and all solve wind producers' curtailment problems. Soluna helps producers sell every megawatt they could generate. We have power prices in there just at under 3 cents per kilowatt hour. Most are actually closer to or under 2.5 cents. At the end of the day, that's closer to our target. When a project is ready for construction, we'll disclose the final power pricing to you. Another thing to note is that there are 200 megawatts of projects that are not yet under LOI that are both inside and outside of the US and also include solar power. I would like to update you on our disclosure policies. We've resisted reporting our pipeline, but as we grow, going forward every quarter, we will provide a list that's coded and a stage-rated system based on a rubric we communicate. The main thing to understand is that the list is fluid, projects move in and out, projects stall, then build momentum, and then can stall again. You'll get insight into timetable as projects begin to enter the construction phase and how growth opportunities are developing in real time. The Soluna team has the expertise, knowledge base, and recipe book to develop gigawatts of capacity globally. But to fully monetize this knowledge base, we're going to adopt a business model that's not dissimilar to that of Brookfield Asset Management. Sometimes we'll own 100% of a project, all the compute, all the infrastructure. Other times we'll form some sort of joint venture or do a project financing where we take on equity and debt partners in the project. Our overall goal is to monetize the opportunity set provided by the Soluna recipe book and its knowledge base, but at the same time being careful to manage our cost of capital. Let me tell you a little bit about transaction close timeline. We expect to issue a proxy called by early September, have a shareholder meeting in mid-October, and close this transaction by the end of October. At that point, we'll get a new ticker and we'll trade under it post-close. This brings me to our FAQ section of our presentation. So many of you might want some more details on when do shares actually get issued. So along with cash consideration paid at close, there are 150,000 shares of MTI stock that will not be contingent. They will be issued at close. About 2.97 million shares will be contingent and issued as follows. But before I get into the details, I'm outlining this for you in a slide. And I would, for those of you that are interested in the details, I'd specifically like to refer you to some of our current filings with the SEC as well as our upcoming proxy statement. But just to get into some of the details, as I mentioned earlier in the presentation, 19,800 shares will be issued for each active megawatt that occurs within 5 years from the closing date, up to a total of 150 active megawatts. If at least 50 megawatts are activated before June 30th, 2022, then shares will be issued at an accelerated rate of 29,700 shares per active megawatt. If Soluna does not achieve the 50 active megawatts before June 30th, 2023, then the aggregate number of shares that will be issued will be reduced by 50% because timing is important to us. One question you might have is, doesn't MTI already own shares of Soluna? The answer to that is yes. MTI invested $750,000 in Soluna, which is approximately 1.83% ownership on a fully diluted basis. Now, depending on the timing of the megawatts built, how much of the contingent consideration is earned by Soluna, and the ultimate share price of MTI, MTI will receive proceeds as any other shareholder would according to the contractual rights of our preferred share investment. Some of you might ask, what happens to the current agreements between Soluna and MTI? We would have been contractually obligated to pay an O&M fee and a profits interest fee on the TNT, Anaconda, and Python sites. So just normalizing and looking at, call it 2022, the O&M fee would have totaled to about $400,000. And the profits interest, based on our best guess, would have been about $1.48 million. So you add those two up, that's $1.8 million in cash flow that would have been due to Soluna. And looking at 2023, our best guess is that number gets close to $3 million. So that cash stream that would have been paid to Soluna comes very close to covering the entire cash cost of bringing the Soluna team in-house. So in my mind, on a cash basis, the deal pays for itself. So we're talking about financing a fairly significant pipeline. And so I thought it would be important to share with you how we planned on doing that. So when we talked about the 100% owned projects, that's corporate cash that we raise and inject as sort of a GP on our own. Then there's the JV arrangements, so one of which I explained to you earlier this week. We've already engaged in one of those agreements. Then there's what I call the more project-oriented financing, which involves potentially low loan-to-value, non-recourse debt put on a particular project, and also taking in equity investors into the project where, for example, they get a fixed return of 10 to call it 15%, and then above that, we share returns 50-50 with them. Our goal is to continue to innovate and drive a lower cost of capital because we're really effectively solving to finance this pipeline of projects with the lowest cost of capital possible. Another question would be, why is MTI changing its name? Well, by the end of 2021, on a run rate basis, we expect to generate between 75 and 85% of our EBITDA from the Soluna EcoChain sort of business. We believe our holding company identity and ticker should align more closely with that business. Another question might be, what are you doing with the instruments business? The instruments business it's a strong, growing, vibrant, market-leading technology business. It continues to perform at or above our expectations. As we said when we entered the crypto business in 2020, we continue to evaluate our portfolio, especially as the crypto business continues to scale. What's our ESG policy is something that's come up in my discussions with investors. So by the end of the year, we'll formulate an extensive scorecard on all relevant ESG variables. We'll then score ourselves publicly every quarter to share with investors where we are on the spectrum of assessment for each variable. Our business model and corporate ethos commits us to enabling and promoting renewable energy globally. We're also committed to having an active, positive impact on all the communities with which we interact, and really redefining transparency and accountability in our governance and reporting policies. We expect to set high standards for ourselves and meet them. Does MTI have any interest in called the old Soluna? Well, Soluna Technologies is going to be renamed the Harmattan Energy Limited, since its only asset is going to be the Moroccan project, which is that's what it's named. Prior to the transaction, MTI had project rights to the first 100 megawatts of computing power, And as part of this transaction, MTI's project rights are increasing by another 100 megawatts for a total of 200 megawatts. So MTI will also maintain its current pro rata ownership in the old Soluna. I do want to review one page in the appendix, which I think will help clarify the transactions. This is a visual summary of the two transactions which were summarized earlier. You have the old Soluna, which is now being renamed Harmington Energy Limited. It had, we'll call it, three pieces to it: O&M agreements, the Moroccan asset, and the team and the pipeline of projects. So it's the O&M agreements that are getting bought out and the team and the pipeline of projects that are being brought over, where the, call it, old Moroccan assets stay in old Soluna, which is now being renamed the Harmington Group, and MTI is retaining its series of interests in that entity. On the next two slides is more detail on the two stages of the transaction, which were condensed in summary form up front. I'd like to thank you for joining me today, and I look forward to any feedback or questions you may have.